Hello and welcome to another update video about VeChain. It seems like VeChain wants to use the orange pathway, the orange wave count that I put on the chart yesterday. I think that sort of warning I gave out yesterday, I mean, it's not really a warning because it's not really a bearish wave count. It just means a deeper pullback for now in an overall bullish setup. Yeah? And that bullish thesis, the overall bullish thesis would not be impacted by a deeper pullback here into the latest orange support area I've now put on the chart. The thing is, I looked at it and said, okay, so either this is a 1-2-1-2 setup, but then this would be another 1-2, so it's getting super unrealistic now, especially as we broke below that trend line. Now, fair enough, you can draw the trend line in different ways, so maybe you can make a case and say we were still holding it. It's rather a channel, but it doesn't really make a difference. The thing, or the point I try to make here is that we have either a very bullish direct breakout scenario, and we have this series of 1-2 setups, but it's getting unrealistic at some point, right? With all these 1-2 setups. Or we have the orange count, which means that the movement that started here on the 27th of March at this low, which was at around 2.15 cents, it was just a diagonal pattern. It's a diagonal pattern, basically a 1, 2, 3, 4, 5, basically O wave 1. Yeah, I saw that shape yesterday with that latest high and thought, well, this looks a bit like a diagonal. You can also count the subwaves here as 3-wave corrective structures, and the pullback that's occurring basically now could be that wave 2, and you would expect it happens as an A, B, C correction. If this is the case, bullish support is at 2.23 cents. That can be used for trading if you choose to do so. Again, I can't really recommend anything to you. I can really only share with you the pullback areas, the support areas, based on Elliott wave rules and guidelines, where prices, if they follow a certain scenario, should go into, and where they should also reverse, ideally in the current wave count. But the overall bullish support here is the 2.07 cent level. So as long as we are holding that, the overall bullish thesis is alive. What you can never rule out with a diagonal, because if you get too many of these overlaps, it can either be super bullish, but again, when you have too many of them, the chart gets, let's say, charged up too much. It gets too bullish, it's unrealistic, and I don't necessarily believe it, even though I don't want to rule it out, right? But it means it could be a diagonal, and that's the problem with a diagonal, diagonals can also look, because they are corrective structures, it could just be something like an A wave down, a B wave up, and we come down much deeper in a C wave. So it could just be a B wave as well. And that's the problem with diagonals. So that's the problem when a chart has too many 1-2 setups, or when you have a diagonal pattern. A diagonal pattern always needs proof. What does it mean? Because a diagonal can be a corrective structure as well, easily. I can easily count this as an ABC or a WXY. It needs confirmation, basically, in the sense of, right, we're adding a pullback area onto the chart, and as long as it's holding that, we can assume it's a wave 1 diagonal. But if it drops below that, even if it's just a little bit below the 2.23 cent level, then we have to assume, okay, this was probably just a B wave, and we pull back in a deeper C wave. But then again, this support area will come into play all the way down to 2.07 cents, and therefore I'm saying, as long as we're holding the 2.07 cent level, the overall sentiment, I would say, is still bullish. Okay, that's my update about VeChain. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.